Hi everyone, this is Frederick from Poland Invest, aka Fredco. Today in this video, we're going to talk about the differences between investing as a private person in Poland and investing as a limited company. A lot of people ask me, Fred, what should I do? I'm going to invest 500k in one of your projects, but do you think it's interesting for me to start up a limited company in Poland for tax purposes? Well, my friends, the answer is not that easy, like yes or no. First of all, there is the initial investment. Secondly, you have to think about what is my goal when I want to invest in real estate. Do I want to buy the property, rent it out and hold it? Do I want to buy the property, rent it out and sell it in a few years from now? There is a difference between a private person and a limited company. First of all, there is the initial investment. And secondly, there is rental income. And then finally, you're going to resell the property. So these are three transactions. So let's start with the initial investment. Everybody, whether you are a private person or a limited company, has to pay VAT. In Poland, you pay 23% VAT on the land value and you pay 8% VAT on the construction value. However, there is a difference between being a private person and being a limited company. If you're a private person, you pay 23% VAT on the land and 8% VAT on the construction value, but you cannot go to the tax authorities and say, guys, can you please pay me back my taxes that I paid on my initial investment? Compared to that, when you are a limited company, you can claim back your VAT. You can claim back the VAT that you paid on your initial investment. Once you prove that you are a professional organization and that your goal with your LTD, your limited company in Poland, is to buy property, rent it out and sell it again on the secondary market. So that's the first difference, VAT. Secondly, there is rental income. Everybody who has rental income should pay taxes on rental income. But also in that case, there is a difference between a private person and a limited company. As a private person, you will have to declare your personal income tax in Poland, meaning that you will pay 8.5% personal income tax on your net rental income. Compared to that, rental income for a limited company is income on which you will pay corporate income tax, and the standard rate of corporate income tax in Poland is 19%. However, there is an exception. If you are a small company, what is a small company? A small company for the tax authorities is a company whose revenue is less than 2 million euros. So that means if you have less than 2 million euros in revenue, you don't pay 19% corporate income tax, but you only pay 9%, which makes a limited company very attractive compared to buying the same property as a private person, but even more as a foreigner. 9% corporate income tax. For example, I'm living in Belgium, Most of my investors until now are people who live in Belgium. They own their own company, they have their own company, and in Belgium you pay approximately 20 to 25% corporate income tax. So could be an interesting argument to set up a limited company in Poland, because as long as you don't have more than 2 million in revenues, 2 million euros in revenues in your Polish LTD, you only pay 9% income tax. So there is an argument here to establish a limited company in Poland. Okay, so first we have VAT. Secondly, we have income tax, personal income tax compared to corporate income tax, and the 9% corporate income tax compared to when you are, for example, a Belgian company owner where you pay 20-25%. Other countries, Holland, France, also they have a much higher corporate income tax rate. So when we compare these with each other, then it could be interesting to think about starting or setting up a limited company in Poland. And finally, of course, there is the tax you will pay on the profit you make when you resell your property on the secondary market. When you're a private person, it's easy. When you decide to sell your property on the secondary market between the first and the fifth year after you did the initial investment, you will pay a tax on the profit you make. Tax rate in that case will be 18.5%, if I'm correct. 18.5%, it's a flat rate. When you decide to sell your property after the fifth year, then you don't pay any tax at all. So it's 0% tax. Your profit is net profit. So that's quite interesting if you are a private investor. With a limited company, at the end of the year, you sell the property, there will be a net profit, and you will be taxed on the net profit, which is going to be your income tax, 19% or the 9%. However, that's briefly explained how it works. But with a limited company, there are some fiscal techniques to spread the profit tax over the years, which makes it a little bit more interesting compared to buying property as a private person. So again, first of all, we had taxes, VAT, on the initial investment. We have taxes on rental income, and we have taxes on the profit you make when you sell your property on the secondary market. I would suggest go talk to your local tax advisor, then you can make some calculations, and then finally you make the trade-off whether or not to set up a company in Poland. But it's my feeling that once you start talking about investing a considerable amount of money in real estate in Poland, it's definitely worth thinking about setting up a limited company in Poland for tax purposes. I thank you very much, and we talk soon. Bye bye.